In the last decade and across the globe, microinsurance sector has developed largely as a function of regulation. In countries like India and Philippines, while the sector has developed because of positive microinsurance regulation, the absence of regulation has made no impact in a lot of countries. A lot of countries are now developing their specific microinsurance regulations, for example, Uganda, South Africa, Bangladesh, Nepal, Pakistan. However, it is proven now that the mere presence of microinsurance regulation would not help the sector to grow. So the question remains, what is it in the microinsurance regulatory infrastructure that makes a successful regulation? Now, a lot of international bodies, including International Association of Insurance Supervisors, have tried to come out with a framework and guidelines about the fundamental principles on microinsurance regulation. Let us try to simplify this, all the efforts, and try to see what is it in the sector that makes an effective regulation. Before getting into the specific regulations, what is required is a fundamental readiness or capability of the microinsurance regulator or the regulator as a whole. Let us hear more from Lisa about what is it in the regulatory infrastructure that creates a readiness of the regulator. So Lisa, can you throw some light on why readiness of the regulator is important?
Yes, as you just said, before even getting into the specific microinsurance regulation, one has to look at the overall regulatory infrastructure of the country, because this works as the foundation on which the regulator and the sector will stand.
So what do you think constitutes such readiness of the regulator?
The microinsurance regulatory readiness of a country can be assessed using 4 factors. First of all is the capacity of the regulator. It is necessary to have a regulator capable of managing multiple and diverse types of entities required in microinsurance. For example, an independent insurance regulator which efficiently supervises already more than 100 insurers, like for example in the Philippines, may have a better regulatory capacity than a small division of insurance regulation in one of the ministries of the country, regulating less than 10 insurers, like in Cambodia. A better regulatory capacity ensures minimum leakage and thus indicate efficiency in the implementation and maintenance of the existing regulation. Secondly is the capability and focus on the implementation of market conduct principle. For a mature and efficient microinsurance sector, it is necessary that the regulatory and supervisory guidelines are actually implemented in a way that the financial and insurance principles, for example, client protection or fund management, that those principles are actually followed by the players with transparency and in accordance with the best practices worldwide. Thirdly is the regulator's readiness for flexibility in product and processes. Microinsurance requires innovations and new approaches in its entire value chain. So unless the regulatory foundation is ready for such innovation, there will be little scope for the microinsurance sector development. And last but not least comes the avoidance of regulatory arbitrage. Because microinsurance deals with an elongated value chain, some functions of microinsurance, for example, risk underwriting or distribution, are often managed by different types of institutions, which in turn are regulated by different regulators. So this leaves a room for potential regulatory arbitrage or conflict. For example, in Bangladesh, there's 2 separate entities, one being the Microcredit Regulatory Authority and the other one being the Insurance Development and Regulatory Authority. And both claim microinsurance to be under their respective regulatory control, potentially causing regulatory arbitrage. So the existence of one microinsurance regulator, or at least a very close collaboration between the different regulators, enables the sector to avoid such regulatory conflict or controversies in microinsurance.
Thank you, Lisa. I think it's very important to have a ready and capable regulator to have an effective and efficient microinsurance regulatory infrastructure and the sector as a whole. Now going further, let us hear from Yuliya. What is it in the specific microinsurance regulation that creates the platform for a good sector or efficient sector?
So, Premasis, what the microinsurance regulation needs to provide is a clear direction to the industry, clear definition of products to be offered, practice to be carried out under microinsurance, and this distinction in terms of different types of distribution, institutions, investment, solvency, and market context are seeds for development of a confident microinsurance market. This includes clarity on the following areas. The first one is institutions for microinsurance. Microinsurance is provided by diverse semi-formal institutions such as mutuals, health providers, church groups, either with or despite lack of regulatory legitimacy. In the absence of clear guidelines on institutions, many such unregulated regulated entities can mushroom. There are often ultimately offend or unable to scale up due to fear of being banned by the regulator in the future. The second area is product and pricing. Since microinsurance is new for many insurers, they feel more confident to enter the market when the regulator clarifies the scope and boundaries around product features, like for example in India, and price ranging, like for example in the Philippines. The third area is intermediary and distributions. Clear guidelines necessary on roles and responsibilities of all entities allowed as either distributor or intermediary are essential for microinsurance market. Moreover, the provider's approach towards new and alternative distributions, like for example banking agents in India and across much in Africa, affect the potential microinsurance growth in the country. And lastly, clarity on social security and microinsurance policies is a necessity. Clarity on intention, quantum, and areas of social security indicate whether such social security insurance scheme will affect the microinsurance growth positively or negatively.
That's right. Thank you, Yuliya. It is very important to have a capable regulator as well as clear regulation for the sector to develop. However, that's not enough. To develop an efficient sector, the government and the regulator needs to promote the sector in an effective way. Maybe Akshat can throw us some light on what is it in the sector, what is it that the government or the regulator can do to promote this microinsurance sector?
Well, Premasis, motivation to insurers by regulators and government is not only important for initiation of microinsurance but also for its continual growth and improvement, and it varies across the regulators and governments. Regulators and governments often encourage insurers to start microinsurance through market scoping studies, for example in Pakistan, and or by providing them a captive client base by allowing the usage of government infrastructure for the sector. For example, the Indian government recently allowed its rural e-governance infrastructure to be used by the insurers. In many countries, microinsurance is in fact initiated only after the governments have created a demonstration effect through pilot programs on microinsurance or by providing them the necessary infrastructure to proliferate the growth of the sector. Commercial insurers, if they are incentivized to enter microinsurance, they would bring in efficiency in the sector through their past expertise and experience in insurance business. On the other hand, it is also important to have semi-formal microinsurers under regulation to optimize client protection, pricing, and market conduct. Now, regulators often incentivize these entities through collateral benefits, like the case in China, or mandatory participation, like we have in India and Bangladesh, and or by reducing the capital requirement, like the case in Philippines. Third approach can be to build awareness. Microinsurance in any country is positively reinforced if the regulator or government actively promotes the growth of the sector through publications, press statements, or conferences. Creation of an exclusive website on microinsurance, seminars organized by the regulators on microinsurance, or inclusion of microinsurance in the National Financial Plan are some of the measures undertaken by the regulators to promote the sector. And lastly, it is also important to have a positive political interference and effective subsidies. While inconsistent policies may restrict the growth of market-based microinsurance, on the other hand, a positive political intent may promote microinsurance in any country despite the absence of clear regulatory guidelines or necessary infrastructure. Similarly, subsidized government schemes, especially if they cover full premium cost, have proven to be a deterrent for market-based microinsurance unless they are effectively used in combination with the client's premium. For example, a 50% subsidy on premium which is given in Nepal.
Right. So now it is clear that ready regulator, clear and specific regulation, as well as the government and the regulator promoting the microinsurance sector is what creates an infrastructure of effective microinsurance regulation. Going forward, we should try to assess the regulatory infrastructure of different countries using this framework and try to see how they perform.